All right, good evening, guys. Ken at Tortoise Capital. Thank you so much for your patience. This is the nightly strategy podcast for June 5th, 2020. We're going to start with the market health check. And what a day we had today. The Mr. Market catching all the smart money by surprise. You know, Bob Rourke had sent us, some articles earlier this week and last week that was talking about how the retail trade is exclusively responsible for this crazy set of price action that's driving the market to new heights. And all the smart money sitting on the side because they know that this can't last, and they've all got these enormous short positions because they're just going to get that done. And then the jobs report came in, and not only did we not lose jobs, we added jobs, and they just got smoked today. And I feel like we were prepared for that kind of eventuality, and the hybrid frog and the supported spring crossings all did their job today in a very routine manner while the rest of the world was trying to make sense of it all. We're not trying to make sense of it, we're just trying to trade. Now we're going to try to make sense of it, but we do that not when we're trading, because that's not trying to make sense of things is not good for the team when you're trying to trade. So, like the coach says to Nuke LaLoosh in that baseball movie with Kevin Costner. What is that? Yeah, stop thinking, it's bad for the ball club. So today we had a nice big gap up of about I think it was 1.5% or 2%, and it crushed it to the upside and sold off just a little bit at the end, and closed in the upper third of the day. So we got an amazing follow through to this week. It made a new 10-day high and a new 30-day high. We are above the previous Z3 excursion. We're in spitting distance of the new Z3 excursion here. So the new 10 and 30-day high, and then the 10-day look back goes to here. And then the 10-day low was 10 days ago. So this is going to start marching its way up. The 10-period regression line is steeply up. We talked about that yesterday. We said, hey, they're dropping a day off, and if we add a new day, then this thing would get to be pretty steep. And I should just keep saying that, I guess, right? Like the rooster that crowed and made the sunrise. I guess if we just say it enough, it'll make it so. So it closed well. There's a 10-day high, 30-day high. The 10-day low is here. All we have to the upside are just some statistical measures that we look at, like the Z3 excursion line, and then the peak RL270 long-term fair value is at 325. 325. That's just hard to believe, isn't it? And what does that represent? Let's look at we look at the daily charts back in the day. Right? If the peak of the RL270 is this price back here. So before this great big sell-off, right? In a bull market, remember those? It went to an all-time high at around 340 right here, and this long move here was so strong that it was in that floodplain between Z1 and Z2, except for this anomaly. And it's been, it had a really comfortable ride, pull back, and then forged on to some new gains. And that move was so strong for so long that it had pulled far away from the Bollinger Band mean, And the RL270, which had been chugging along here, riding the tails of the upward move, had gotten as high as right here, 325.31. So that's where the old curmudgeons, the long-term buy and hold people, assessed fair value on the basis, the way we define it with that RL270. And to the upside, the RL10 in the peak of the summer here was 339. So if we take this little trend line and measure it up here, it had gotten 4.75% past long-term fair value. So 4.25%. And then depression set in. So one leg down, then two legs down. Let me push my little button here. And then that same underperformance went from here, from this peak, probably down to about there. That's like about 28% and some change. Yeah, 28% was the maximum stretch to the downside. And so the peak that it ever got to by that measure is 325.31. Well, as time passes and people are adjusting to this changing of the climate and the circumstances here, as it sold off harshly and then rapidly comes screaming off the bottom, we had the RL10 race up and meet the RL270 here. So for that bright shining moment, the long-term fair value and the short-term trader's price all agreed. Well, is that a super pinch? It is not, because at that moment, the RL27 or the RL90, which hadn't made that turn yet, and it's coming back, hadn't caught up. So this is not even a Z3 pinch yet, because the width of the Bollinger Band is so large. Like, it would have to be this tight and have everything pinched together. Oh, much like it was here. Look at that, a super pinch, and then the breakout from a super pinch, and all that complacency crashes like so much crystal in a china shop when the bull and the bear start fighting. There's some imagery for you. So this thing has now moved from an extreme pull on the bowstring all the way back to an agreement between the long-term fair value and the short-term price. The RL270 and the RL10 agree. And now, like so often happens, now the traders are going to push it back further up, while it takes a long time for that RL270 to slowly turn and catch up to them. And so that's that oscillation between, that trade-off between long-term fair value and short-term price. So when we're calibrating our estimates here, this is the current. Let me get a little diagram here. So the current fair value is down here at 298.57, and peak fair value is 325.31. So that's about 30. So that's about a 10% difference between what the highest high ever was in the RL270 with where it is right now. And you can see right now that these traders are going to try and pull price up to there and beyond. So we can in our LFF theory, one of the things that we look at is, we would say, if the traders had enough strength to pull it 28% this way, how much further north of this could they pull it? Well, maybe 28%. And what we've got now is about probably 5%. And it really has to fight its way up through that peak RL 270. And then the only thing that's left is it's got to close this gap. And really, we're right back to the previous Dragon peak and the previous RL10 peak, which is really the theoretical, statistically significant all-time high. And we're now right here. 50 days ago, we were talking about this. And could we even think about getting in? And there's our supported spring crossing with a stop here. Never look back. So that's that. So when we're looking at this, and we say peak RL 270 long-term fair value, that's what that means. That's the 325.31. That's market classification, market condition. That's target setting for the upside. That could be a support and resistance level. And if it breaks through there, there's nothing to stop it at all until it gets back to the all-time high around 340, which is another $15 beyond this. That's essentially just barely off the top of the chart here is the all-time high. So there's our 10-day range. The RL10 regression line is very strong. Today's trading range was not actually all that big. It's only a big day when you factor in the gap. We have the RL10 peak true price performance here at about 317. We have the Z2 line. There's the baby dragon. It's been a solid guide saying, yep, you can stay long, stay strong. We have the range of the dragon right here. I kind of like drawing that as an orange region. It gives today's range versus the dragon's buffer some clarity. We have the dragon extension here, very strong north. The RL 30 extension is looking very strong. And the PSAR extension as the projected future price levels. As long as it's staying above there, it's looking pretty good. I'm not really projecting, I haven't drawn the projection line on the Bollinger Band mean, but you could see how that would look like this. And if you get it even shorter from the last 2 days, even that one's looking pretty good. And as we've been working this week with the idea of the Z0 trailing stop for the intradays, that's kind of the projection of what that future price would be. So you see it has about this much wiggle room. If this started to fail, if that was the slope of the line going up, that would be the equivalent line going down. But if it got twice as steep, a sharp sell-off would have to look something like that, which would feel pretty. And there it is. That RL 270 fair value is probably in the strong support level, and the current PSAR would protect you against the fail to the Bollinger Band mean, and especially since that's going to keep rising, that's protecting you against the return to the mean. So there's this pretty strong argument for the PSAR extension. If, as you recall, this 10-day move was pretty good, it had just gotten above 1 sigma. So that's pretty good. There's a reasonable argument to be made that the spine of the dragon is pretty good as a stop, and that even the the upper skin of the dragon, which almost looks like right now, almost like the RL 30 extension. I wouldn't be offended if you picked any one of those 3 lines to lock in whatever gains you had made in this move, depending what your objectives are and all that. So we're in pretty good shape in this one, and I feel like we've got many places where we can reasonably use math to place our stops. So there's the skin of the dragon, spine, bottom of the dragon, the PSAR stop here at 300 even, the RL 270 current fair value at 298.6-ish. The Bollinger Band mean at 294. The 10-day low today is at call it 293. The Dragon Belly from right where we're sitting, just take that rascal straight across, 285 and 3/4. The Z-1, the final official end of normal behavior on the way down, 284. So plenty of places that we can arguably lock in some gains. You might look at this as a function of how much of the, from wherever you got in on this, how much of that move that we're currently holding do I want to maintain on a percentage basis. I've added this little pastel looking summary of the week at a glance so I could feel what the weekly bar looks like. So this was a 5-day week. So this is where it opened down here at the old Z1 at 304 and done nothing but do well, and then closed at 319. So that's 15. That's a 5% move this week. Pretty amazing. Here was the first half step last week. This was a great big step. This was half of that, and then this was that tight consolidation. So you talk about, you know, a roaring dragon. That thing is just opening his mouth wider and wider. Hard to imagine we could get another one of those in here, but well, wasn't expecting this. So who am I to say what we could expect next week? All I know is I've measured my risk, and I'm putting in my placement for stoppage. We're still well into the summer. How good was this call on the MACD histogram and 4 seasons, which said after this consolidation here and failure to fail and the breakout, this gives you that fall, summer, supported summer or supported fall crossing, I suppose, and nothing but good. That's not bad, fellas. Everything worked today. Just reading from the Simon Property Group, which if you've been playing along this week, 15%. Devon Energy, 14.5%. XOP, 11.8%. Boeing, 11%. U.S. Steel, for crying out loud, 9.5%. UDow, 9%, looking tame. Cliff Natural Resources, 9%. Caterpillar, Mexico, small caps 3.8%. Brazil, 3.8%. Finance, 3.7%. You got to go a ways down to find the S&P at 2.5%. The Dow was up 3%, so that was where the strength was. That was money flooding in from all that professional smart money that had been short or standing by and hedging. That was just knuckling under. Now, what happens, you know, a month from now when they revise the estimate? Who knows? But we're in tactical trading, and that's what happened today. The only things that got smashed today, Pfizer, Walmart. It's just, I can't get my head around that. Pfizer, Walmart, Virgin Galactic, Treasuries, that makes sense. eBay, Wheaton Precious, that run's probably done. So there we are. That's what worked. Let's see. Here's, if that's the daily, here's the, is this the weekly? No, that's the monthly, sorry. We're going to take a look at the weekly. So this is in the weekend report. So this is the sense-making lens applied to just the weekly charts. Is this weekly? No, I'm sorry, that's a monthly. Sorry. So the big sell-off, and remember we said that bad quarters really feature bad months, and bad months feature bad 2 weeks. That's what that looked like, and then it already rebounded. Strong, strong, and strong, but this recovery was half the size of this bar. This little bounce was half the size of that bar. This month was half the size of that bar. So if we just take that as something like symmetry, and the echo chamber getting half again each time, kind of a Zeno momentum loss. Half of this bar is $10, which makes 330 within range next month. So 10 30 would be 3%. So it's just got to have a 3% month to get to here. And that feels like it's within range. The upside, it's got to break above. This would be the PSAR flip and kind of the Z1 and the monthly high. And it takes out peak RL10. I mean, Jiminy crickets. This is like no resistance here. They got to buy it. It's still in the floodplain. And then we would have the, I would say like halfway to the Z3, which was also that peak. That was a run up and a test and failed. So maybe there's some strength in that around 320, 332. And then the absolute peak high, then the Z3 excursion, and then, who knows? I'm marking off the dragon range as sort of the yellow. I would say that's really the first warning shot would be about 312, spine at about 303. Strong support here at the belly at about 293. And that's probably also the belly of the dragon. Bollinger Band mean 290. And then the 2-month low about 277. C minus at 270. And then you can see all the rest of it. But that's doesn't get much better. That almost reminds you of this one. Big sell-off and a recovery inside the month. Half that, and ended in a doji. And then it kind of got sideways, choppy, and back to tactical trading. So could there be one more month in there? Yeah, sure. Month of June. Last good month before the heat of the summer, and we got June to get things squared away in this nation. I'm really surprised by people saying, hey, what we think we need is to defund police. I mean, I understand the problems with police, but no police? Really? Try this experiment. Put on a blindfold, walk by yourself down the middle of any American city with a handful of cash in your right hand and a handful of flowers in your left hand, and celebrate the lack of police and report on that experience. Just tell me what that experience is like. You don't have police because you want them, or even, yeah. So, weekly chart. Let's see. Is it this one? Yeah. So, on the weekly now, there's the peak of the Dragon and the RL10 right here at about 335. Then the all-time forever high here at about 340-ish. the Z2 excursion, the Z3 excursion. We're within spitting distance of the edge of the river and really the top of the Dragon right here at 330. That's in range. And it takes $10. So it could get there in a month, but it moved from 302 to 320. So that was an $18 move this month. But you just feel like that move from here to close the deal feels like it's within range. May get all of that on Monday and then collapse. Who knows? We'll see. Fair value here at from the RL270 is basically as if this sell-off and recovery never happened. The weekly fair value is long-term is right where we are, and that's peak fair value. And so we're above that. This market is more than fully priced, and that's what 14 trillion of free magic money looks like. That's how you do that. How much glue did they add to that paper that's holding up this house of cards? That's a nice image. I will notice that the fall, winter, spring at the Bollinger Band mean at 303. And powerful move. RL90's rolling up. Baby Dragon was a pretty good guide. It said right here, yeah, you could probably buy the breakout of the previous bar week over week. And I think you can add here if you get any kind of motion. I'm starting that off with turbo trading every day. I am less confident than ever. That's usually a good posture to be in for me. The ETF2 tape, just because I'm here, these were the winners in the ETF2 weekend report. I just happen to have it up, so just on the in Snagit. So all the greens, all the time, or I'm sorry, green and white semiconductors. So we should be looking at Intel and Nvidia. Then discretionary, Russell growth, S&P growth. That's all your green and whites. That's where the strength was. This is actually pretty good too. When you have white and yellow, that's like a accelerating strength. Healthcare is giving up some of that gains because that's not really an explosive growth area or a place that you're going to see a lot of enthusiasm for profit making, especially if that gets nationalized. And now this is something you don't see that often. A green and red, the two from extreme to extreme. That's XOP, which we love because look at that average volume and look at that ATR percentage. That is such a beauty for short-term trading. Beauty. So that's where the big gains were. It's tech and semis. So Intel and Nvidia, XLK, it's looking good. Guys did some good work with the supported spring crossing today, so I'll let you guys look at that. This was me trading this volatile day. I started with the U.S. Steel. It had a huge gap up. And I bought some in here and scratched it in here when it didn't follow through any further, and then just said, uh-oh, seen this before. So like a sideways quiet channel. Here is the Z3 excursions, and then no more follow through. And the RL10 summer rolls over, hits the baby dragon, comes back into Z2. There's a P1, that's at RLCO outside the river. Crosses the dragon. I just said, RL30 rolling over. There's the PSAR flip. That's the supported fall crossing to the downside. Now, you see this red line. You wonder what in the world is that red line? Somebody in the hybrid workshop had asked me for. They couldn't get regression lines on there, so I just started fiddling around with the exponential moving averages. The EMA3 is probably as close as you can get to the RL10 in terms of where it crosses the dragon. So that was really, I wasn't as concerned about. I like the fact that the RL10 gives you this exaggerated turn and then rapid reversal, because that really stands out to me as a changing of the condition. So I like. Some people say, well, it's not a good accurate measure. That's not what I'm trying to get. I can see the price, for crying out loud. What I want to see is that's like a microscope looking at the changing of the condition here. Like you can, if you're a young person, you could see maybe a change in EMA3 slope. This one is absolutely clear when it crosses its own little 3-period baby dragon right there. I can see that, whereas you don't even see that in here. This gives you a very clear indication of what's going on and what's coming back. Whereas this thing is, oh no, it's still working. Psych. So anyway, the EMA3, when I made this chart, I was still fiddling around with it. So that's why that red line is on there. It's not on the other charts, but as you can see, was experimenting. So we're short here at 1045 with about a 12-cent risk. Collapse through the VWAP, collapses, no lose plus dinner for 2. Collapse through the 90, through the Bollinger Band mean, and collapse. Hooray, comes down. Now we're 30 minutes in. We're at 994, so that's 6 plus. That's 51 cents on about 12-cent risk. It's about 4R in hand, 4 execution R in hand. And it comes all the way, down to, that was sort of the peak failure, right around 995. So it didn't get much worse than that. And then just felt like enough. And we're getting ready for a supported spring crossing. So that just felt like a strike exit. Hey, you had 6 minutes to fail further and you didn't. So we'll make bank right there. Brazil had the same feature, had that big gap up, rolls over. I'm basically getting short here at the same time I'm getting short US steel as it crosses through the dragon. Short here, stop at the top of the dragon. That's about let's see, 335 to 23. That's about 15 cents. As it starts failing, I just am tracking with the VWAP. At this point, I said, let me just strike and get to and lock in this much gain. And then let me pick up the skin of the dragon all the way down. And then right here, I'm tracking the skin of the dragon. But this one, it went fall, winter, 4 minutes in a row and couldn't get any further and had 1, 2, 3, 4, no further fails. And the first sign of getting better, strike. Supported spring crossing with a stop here. Runs up, and I didn't want to lose money, so I get that. I harvest a little bit. 1, 2, 3. RL10 rolls over, crosses a baby dragon. A lot of other things were failing. I wait. I strike on the short side with a stop here. After 1, 2, 3, I move to no lose plus dinner for 2. That one works. This was a collapsing dragon. I didn't add, just traded it in the usual way. RL10 reversal, crosses the baby dragon, strike, starts rolling over again, short. Hey, here's a high, here's a lower high, here's a lower high, and couldn't even get here. Strike. So that was here, and then it basically scratches. Supported spring crossing. Why? Well, because we had a winter, a harsh winter. I will take that as a harsh winter too, a fall into the winter. Very short spring and summer. I mean, the summer did nothing but fail anyway. Harsh winter. I can't get in. I can't get in here because it's not the spring and the PSAR hasn't flipped. But now it is. So I guess you could have gotten this entry and stuck here. I didn't. I waited to see because there were like 5 or 6 from the little surge, and that wasn't much of a breakout, and then closed poorly. I said, let me just wait and see what happens. It rebounded, and now it had turned, and now what we had was a swing low and a swing low in the RL10. Put it on this side so you can see that. Maybe easier. Now I feel optimistic. So there's the RL10. So that's a low. Project that across. Right in here, the PSAR flips, so that's a strong support level. But it's falling through. By this time, by the time the PSAR has fallen, this has come back through to the dragon, so I can't really buy it. Now the RL10 crosses. So now I can buy that with a stop here at this part of the PSAR. So I just project that across 31.72. My entry was at 31.84, so about 12 cents of execution risk. Now my standard practice is I would just leave this in place until the PSAR dots get above my entry where I could get to no lose plus dinner for 2. So right around here, when price is up in here, I could jump this to the Bollinger Band mean, and now I could pick up a Bollinger Band mean stop right there, and now the objective line looks something like this. That's what that Bollinger Band mean expected stop is going to be. So as long as this price is monkeying around in here, it's okay as long as it stays on that line. Now you'd have to adjust that line once the Bollinger Band starts drawing itself and the MA's in there. But because today is such an extraordinary day with the gap and all that jazz, at this point, I just cut my initial risk in half because it moves so nicely to here. I just moved up to the RL270, said, let me take that. And then it had another little leg up and started coming down. So I just said, you know what, that's enough of this. Move it up to the PSAR dot and then just draw that line and lock in the gain. It held. So then when it put that 1, 2, 3 and is now monkeying around here and it sold back to here, I said, let me just stop and lock this in, and I'm going to leave that here until the Bollinger Band mean catches me up. So I have sort of this rational line, this long-term line that I know is good for me. But I've also seen this thing fail 2 times in a big way, and I don't want to give back that fast from here all the way back down to the Bollinger Band mean. So I just ratchet it up to some reasonable level. As this one is starting to move up, that's when I move this up into just below. So it's like a 2-bar low kind of a deal, and the nearest PSAR, and then ratchet it up. And that one paid really well. UDOW, I mean, this is what 40R looks like. Ridiculous. That's a 40R arrow. Thickness of 40. So in the usual way, this little sell-off right here is happening while like that those 2 earlier shorts that you saw in DIA, or I'm sorry, in US Steel and EWZ. DIA is failing here while those other 2 shorts are working. It has a little bounce and then has a second leg of selling. But notice that the peak RL10 here, and then the higher peak RL10 here, and now we have the lack of volatility and a supported spring crossing, and the PSAR is here, so the PSAR dot is 73.80. The entry is 74.05, so a 25-cent risk. And off we go. Never looks back. This one, I buy this one on a Z3 excursion and above the RL10 here, so that's a emerging dragon second position. So that's a chunk. That's another chunk, which takes out this Z3. But by this time, it's just like, well, geez, it's going up, so just buy it. Okay. Bollinger Band mean in effect for the stop. So now we've got 3 positions in to get another chunk. So now we get 4 positions in. It makes this run up to the Z3. And so if I think of this as leg 1, 2, 3, 4, really? 4 legs you're going to show me? And a Z3 excursion and then starting to fail? Strike. So the first one goes from, call it 74 to 76.50. $2.50 on 25. So that's 10, I guess. Yeah, 10. So if this one is 10, this is probably 8. That's probably 6. That's probably 4. So that's 18. No, maybe I guess it's only 30R. I think when I actually executed this was like a 20. Oh, I see. Yeah, if you measure it right from here, that's really a 20-cent risk. So at 20-cent risk, that's 40R. At 25-cent risk, it's 30R. So just take whatever you want. That shows every technique we have. And that exit feels pretty good. And you got to love that. Simon Property Group, just not even marking it up, just so you can feel this one. I mean, we've been trading that one all week. Winter, spring supported, spring crossing, buy it, you won't lose money. Summer, fall, winter, turn, cross the baby dragon, turn into spring, supported, buy it with the stop here. Not losing money there. Z3 pinch breakout and breakdown. Harsh winter, spring, buy the supported spring crossing with a stop here. You're not losing money on that trade. Here was a U.S. steel at the end of the day, because why not? It made good money. It's 315. I see the VWAP magnet. We had drifted into a Z3P. We were still well below the VWAP, and it kind of got a Z3 pinch in here. And there's the RL270, the 90, the 30, the 10, tight pinch, fake one, go to. Winter, beyond the floodplain, finds support, turns, crosses the baby dragon, PSAR flips. Spring, buy it with a stop here. That's from 990 to 997. That's 7 cents. When the PSAR crosses above your entry and you have enough to get a no lose plus dinner for 2 in here, about 4 cents. Jump your stop, strike, pick up the PSAR stop. At this one, now if you're using the PSAR stop like I am, like right here. So this is just a management technique for you to consider. So you're using the PSAR stop just right there, and hey, that's going to just be fine. But notice that you had this kind of grinding move and this wiggle, little bump and go, bump and go. You get another bump and go. Oh, another bump up to Z3 and holding with a doji. I don't mind if you strike and take that because you were so close to your initial target. So when you bought this, you said, not only is the Z3 line in play, hooray, but a return to the VWAP is in play, so it could come to here for sure. So I don't mind if you take that. That's 12 cents on risk of 7. That's 1.5 execution R. Why not? Or just you're in the PSAR right now, and now when it makes a nice run up to here, that's where I jump this stop, and it makes the run here and then gives me 3 in a row. I'm now only got about 10 minutes before the close. Let me just see. Let me lock it in and see what happens. Oh, it made another bump and run. Okay, let me move to the 1 bar low. Oh, it did fine. Didn't make a new high, so I'll tighten it up. Just take it. There's only 5 minutes left in the day. So this is a VWAP magnet that uses a supported spring crossing, uses standard trade architecture and geometry to make estimates of reasonable moves. We're managing the stop in the usual way. We're mindful of how much time is left. We don't want to hold this over the weekend. Don't be greedy. We accelerate to lock in again, pick up the PSAR if that made sense. At this point, you got another unexpected move up, so maybe this is how I strike and lock this in, give it a few more minutes, and then just take it. And at the end of the day, you end up with, let's see, from 97 to 16 is 19 cents on 7, so almost 3 execution Rs. That's how that rolls. That's what I want to cover. Oh, I know. I want to do the weekend report review real quick. Let's get that done. And then I can start making charts for the guys tomorrow. Strategy report. I mean, bullish, overbought on every possible measure. ADX slowly getting stronger upward trend. It's now at 20. That's not even an exceptionally strong trend yet. It was a nice move, but it's based on the historical stats on the ADX that we covered yesterday, that's not abnormally strong of a trend yet. Still more room to go. That's what we said yesterday. Still true. We're 6.27% above the 200-day movement, so we're 4.25% away from sideways. So we're building a little buffer. We've been risk on for quite a while now. Thank you, Risk Z. You can see there we're in pretty good position on the holdings in the blended monthly rebalancing. Those were the holdings in here. The bunch of tech. ETF2 is up to 100%. All of the indexes are above their 4-month moving average. You've seen the monthly and the weekly and the daily. The ETF blended monthly rebalancing portfolios, big wins in Latin America. Think about what we've been talking about with Brazil and Latin America these last couple of weeks and the exceptional performance. I talked about that last night, in fact. And that's continuing to do pretty well. When you go to ETF 22, some other things that really stand out: industrials, finance, energy, Latin America, all dominating. And notice all the domination is coming from the ones that had been beaten down so severely, buying quality names on sale. That is characteristic of a healed market and bargain hunters trying to get positions broadly with things that are going to accelerate. That's the argument for being a catfish, for bottom feeding and looking for value and then engineering your positions on their recovery. So that's a value versus growth approach. And then you can convert that value into a momentum trade as it starts to pick up steam. So if you see value before other people and you got your position in, then what you're watching for is evidence that the longer term time horizon guys, that third, fourth, and fifth mouse, are coming in to start buying. So you can use your measures of fair value to determine how much more room is available to the upside. So that is a calibrated approach to value, not based on your fundamental analysis and calculation, but just the law of large numbers and herd behavior. That's the way these monkeys and herd animals and carnivores look at the world. ETF 32, again, big winners, and Brazil was big this week. Gold and treasuries and short-term bonds all suffered 1 week and 1 month. That safety is over. There's no safety in 0% interest. When you get negative interest rates in treasuries, and that's coming, they threatened it already. When you have to pay for the privilege of owning treasuries, Jiminy crickets. There's no other place to put money except into the market. If you got all that Fed cash, you got to put it somewhere, and that takes care of their long-term retirement portfolios. Man, it's like playing a carnival games at the state fair on the side of the carnies. A little distasteful, but that you got to do that for self-protection at some point. In the Dow 30, the big winners: ExxonMobil, Travelers, Boeing, for crying out loud. Sector spiders, everything's on a buy except treasuries. Big winners in oil and gas, regional banks, oil and gas exploration. Man, XOP, money, and still plenty of room to go. ETF Max, I'll leave that to you to fine tune even further. But what this is really showing is that all of the longer term defensive plays, all the income producers are getting slaughtered. Smart steps. So we've already seen the big winners. I just want to leap on down to, so I'm looking at the strength column right now. Make sure that's up on your screen. So the strength column is how we sort that. So the green, these are the ones out of that top 100 or so that float to the top on current strength. And then it's all the above average ones in the white column, white color. Then the below average in yellow, and then the ones that are just horrible, just oil. And what I love about Brazil, still plenty of room. Look at that. It's way at the bottom of the stack. Still plenty of room for it to gain. Then the daily report, everything good here. Flip the page. We've already seen those already. Notice that in the channeling and overreaction system, how many things are now above their 200-day moving average. All of the U.S. indices, now the Euro Asia, emerging markets in Europe are out. Only EPP in Latin America are below. Still some good candidates on the 10-day max pains. Pfizer, Boeing, Walmart, those are the ones that have not followed through. Walmart just can't get a break, and it's a 5-day down. That's one that we'll be framing this weekend. RSI value of 2, and it's dramatically underperformed the last 1 day, 10-day, and 1 month. Pfizer not much better. How can those two companies be beaten down when everything else is raging? Got to be a catch-up plan or somewhere. ETFs, some channeling and overreaction. So gold is setting up for a tactical recovery trade. I would play that one, and when gold, treasuries, and silver, that's the whole defensive sectors. And so I think I'm playing that one with Wheaton, starting with a hybrid frog and just in the usual way. And then meanwhile, XOP and XLE and UDOW were the big winners today. Gotta love those. Other than that, this is a market call rather than, I think, individual winners. They bought the market in buckets today. Pfizer, Johnson & Johnson, and Walmart all have really tightly compressed pinch boxes too. Pfizer just continues to intrigue. That's the one where we had that big sell-off from the earnings, and it's still lagging. So I think it's fundamentally sound at this price level and going nowhere but up. It'll look like it's recovering nicely. Auto framer, tons of things. I think it's really, I would not be framing swing trades right now. I think I'm going to be hybrid frogging and then slowly growing, because I just feel like, man, how does that keep going? Of course, how did today happen? Well, because it was the irrationality. But I'll just play it the way I always do when it's prices beyond the Z2. That's just hybrid frog, prove that it's working, save a piece from the day trade to fund the swing trade. Almost everything's in the summer. Things for you to study. All of the breakouts for 3, 10, and 30 days, massive goodness. I start at the bottom of the stack here to find which ones made the biggest 10-day range breakouts, and then look at Apple. And they're just quietly getting it done on every measured time dimension. You got to own it. They've successfully navigated this crisis. The market's just in great shape, as we've seen. Yeah. Look at that recovery. Wow. Just wow. On that second chart right there, it just looks to me like the dragon is turned and his mouth is open, trying to catch the herd as it runs. The open mouth of that river trying to catch him. So just looking at the S&P, the 5-day move is 4.9%, and that is a 2.2 sigma. So on every measured dimension, whether you're holding 1 day, 5 days, 10 days, 20 days, 40 days, the market is more than 2 sigma up. So when enough is enough, that's when I start playing it closer to the vest and let younger and more enthusiastic first mice go for it. So when I'm playing second mouse like that, it's just I I don't have excess risk. I have just measured risk. So I'm watching for a pullback. That will not catch me by surprise if it pulls back next week. And that's everything I want to cover. And I want to give you guys time to study the report in detail. And then I'm going to go through that with a fine-tooth comb for the hybrid workshop guys tomorrow. I'm going to do that in a live session with them, and the recording that I make of that is the one that I'm going to play again Saturday night. Okay, so I'm going to record that for them, and then we'll publish that recording for the Saturday night podcast. And then what the podcast Sunday night is going to be a summary of the trades that we frame. So we're going to practice framing trades this weekend too. And when I talk through those, I'm going to put that in the podcast, and that will bring the hybrid workshop to a fitting conclusion. There's a couple hundred hours of pretty good material over the last 3 months, and we're going to do something useful with it. So that's everything I got, guys. Take good care. Have a great weekend. And Eugene, be ready to work tomorrow, man. Here we go.